In 2023, Bitcoin will reach its final bottom. Hi guys, welcome back to my channel. Today we talk about the inflation and Bitcoin. One of the most volatile periods of modern history is the one we are currently experiencing. Global economies have been devastated by 40-year high inflation, pushing central banks to raise interest rates at record rates. This year, the US Federal Reserve has already hiked interest rates 6 times. The Federal Reserve will convene the following week, a significant meeting, the year's final meeting. According to Jerome Powell, they are anticipated to raise interest rates by 50 basis points. Recent statements made at the Brookings Institution. Now, this is consistent with the current stock market evaluations. You may recall that he announced it back then. Both a spike and a rally were significant. We know they're telegraphed to base 50 basis points, so they're going to do that moving ahead. You are correct that the market is pricing in 50 basis points. That's a no-brainer for next week, in my opinion. After that, I predict they'll switch to a 25 basis point increase. And one more, I'm examining the symmetry of what they did when they first began raising interest rates. They began with a 25% hike, increased it to 50%, had 475 hikes, and are now sort of coming down the mountain on the other side with a 50% and probably a 25% rise. And they will essentially stop hiking by the end of the first quarter of 2023. The market will be shocked by the fact that they won't be decreasing rates either, which is the real kicker. Therefore, I do believe that inflation will continue to be high. To me, elevated refers to 3 to 4%, possibly 5%. So once more, it's already descending. We anticipate its descent. The price of oil has significantly decreased. That is assisting in lowering inflation. However, the crucial question is whether it returns to 2% or less as the Fed desires. And no is my response. The rate of wage inflation will always be tricky. Just remember that businesses can't just treble the price of an orange the next day when people are paid double what they were before. Right, therefore it must pass through. We observed a small rally off of 50 that was somewhat of a guide to 50. Therefore 50 is already reached. As long as the economic data doesn't start to decline precipitously, you'll then look for 25, and the market will welcome that. If we reach the point where unfavorable news becomes unfavorable news, we should recall that unfavorable news has generally been good news since it indicates that the Fed is less likely to raise interest rates. The bad news is that they won't be raising rates as much because the economy is slowing down. But if we enter the following phase, when bad news starts to turn into awful news once more, I truly believe it makes no difference. The market will understand that the Fed won't lower interest rates and that poor news signals the beginning of a recession. Without the Federal Reserve providing a rescue, how much has inflation increased from 1 year ago? The inflation numbers are continually rising, as evidenced by the fact that if we look back a year, they had already begun to spike. Although inflation is still present, it is increasing less quickly, and that's what these recently released inflation data show us. And that's a typical misunderstanding. When the inflation figures are released, everyone hears, "Oh, those were better than expected," but that doesn't indicate that prices are declining. Simply put, it's stating they're not rising as swiftly as they formerly did. Investors must therefore be prepared for that. It implies that grocery store prices will continue to rise over time, but not as quickly. Additionally, it will harm the economy. There is no question that the financial crisis will affect investors and average Americans in the years 20 to 23. It's all of the above, which is the crazy part about it, right? If there is inflation, the Fed will essentially cause a recession from which they will not be able to recover. And keep in mind that the Fed has been printing us out of every jam since 2009, whether it was the banking sector collapse in 2009, all the bailouts that took place, or the quantitative easing that was initiated and then essentially continues. The market had a huge hissy fit and plummeted 20% in only 6 weeks after they said it was okay to start hiking rates in 2018. Then, it gets you into convene. And we know what occurred during the COVID crisis with them printing even more money. That was the biggest, most gigantic printing of money that we have ever seen. They actually reversed and started decreasing rates again. Therefore, it really is everything. The inflation rates, the economy, which is expected to slow down, as well as the general kind of wear and tear it causes on the consumer. Well, consider it. Let's imagine that the cost of housing decreases by 20% or 30%. Consider the scenario where the stock market drops by 50%. Let's go a step further and say the Federal Reserve won't intervene to print money, because if inflation is, say, at 4% to 5%, how can it be done without running the risk of it rising to 20 or 25% if trillions of dollars are printed? We don't want to be Venezuela or one of the other nations with such astronomical inflation rates. Therefore, the question is, how do we escape the upcoming recession? That is the question then. I don't know the resolution to that. At this point, we might as well pay the price because the stock market's decline in 2022 will be worse than it would be in 2023. But you have to go somewhere, right? Gold is present. Gold is a superb performing asset, to reiterate. When you compare the 1970s, the early 1980s, and the gold eras, you can see how strikingly similar they are to the present. However, the significant increase in gold prices that should be occurring hasn't yet begun. There are a number of options, and I would say that since the Fed started supporting the markets, long-term investors have generally had a field day. The market is evolving into one where buyers can no longer just declare, "Hey, I'm going to stash this away for 20 years after making a purchase." You should actually just take your earnings and leave, then attempt to rebuy on the following day. You may research previous recessions, including 2008 and 2009. However, you must ask yourself, how did we escape 2009? And the Fed stepped in and saved us is the answer. They began to print money. They started acting in that way. What happens next? Without the Federal Reserve, how long can a bear market persist? And I believe that as investors, we must act on the assumption that unless inflation rates decline to around 2%, they will remain high for a number of years. Again, this is not to suggest that the S&P would certainly decline by 60%, but I do believe that there will be some downside in the S&P over the course of the next 12 to 18 months. Well, consider it. Let's imagine that the cost of housing decreases by 20%. Assume that in one situation, the stock market declines by 50%. Now, let's go one step further and say the Federal Reserve won't be intervening to print money because of inflation, let's say, is at 4 or 5%. How do they print trillions of dollars with the possibility of inflation rising to 20 or 25%? We don't want to be Venezuela, nor do we want to be one of those nations with such extreme inflation. Therefore, the question is, how do we escape the upcoming recession? That is the question then. I don't know the solution to that. At this point, we might just have to pay the piper because the stock market's decline in 20 and 23 will be significantly more severe. But you have to go somewhere, right? Gold is present. Gold is a superb performing asset, to reiterate. When you compare the 1970s, the early 1980s, and the gold eras, you can see how strikingly similar they are to the present. However, the significant increase in gold prices that should be occurring hasn't yet begun. There are many locations to seize, and I would add that since the Fed started saving the markets, long-term investors have generally had a field day. The market is evolving into one where buyers can no longer just say, "Hey, I'm going to stash this away for 20 years after making a purchase." Actually, you should just take your profits and leave, looking to rebuy on the following phase. You can examine previous recessions, including 2008 and 2009, in your analysis. However, you must ask yourself, how did we escape 2009? And the Fed stepped in and saved us is the answer. They began creating money and carrying out similar actions. What happens next? Without the Federal Reserve, how long can a bear market persist? And I believe that is the premise upon which we as investors must act. The inflation rate will remain high for many years to come unless it falls to around 2%. Again, this is not to suggest that the S&P would certainly decline by 60%, but I do believe that there will be some downside in the S&P over the course of the next 12 to 18 months. Bitcoin is beginning to transition into the position between the two. Right, so I believe what you'll see, and this is in line with forecasts made for 2023, is that although the Nasdaq and the S&P will keep falling, Bitcoin will actually reach a bottom and begin to rise in that year. Therefore, it must dissociate from risk assets and regulation as much as everyone detested the thought of regulation and cryptocurrency will be the key to achieving this. Okay, when we were at the peak, and everyone was kind of, by the way, Tesla had the same reaction that when you saw when Bitcoin reached its all-time high. Since then, Tesla's stock price has fallen by more than 50%. I'm no longer in that short, so again. I don't hold after something has fallen so far since the risk-reward ratio is no longer favorable, but that was a truly stunning collapse. However, if you're a trader or investor, you must start focusing on the psychological cues the market sends out when everyone is in love with a particular asset. If Tesla sales begin to decline significantly, large institutions likely own a much larger share of the company than do individual sectors. You must thus assume that if it keeps going down, as it is currently, it will eventually come in at least as low as $130, $540 per share. However, it is currently $180. It's not a significant decline, but consider how many people would purchase the most expensive electric vehicles if a recession occurred. So in 2023, we predicted that Bitcoin and the S&P 500 would be gold. Once again, I'm going to predict that gold will perform better than the S&P and Bitcoin in terms of percentage gains. But I'll be more specific this time. Bitcoin is expected to continue to perform well for several years after next year. Thank you so much for watching the video. If you like this video, please hit the like button.